This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the data sets and doing a technical analysis for the SPY for February 20th, 2026. And with that said, let's go ahead and jump straight into the data. Quickly going over the data sets on Thursday. Now we had a whole lot of data, but again, nothing that was super crucial. Out of anything, we see really the Atlanta Fed GDP pulling down, which we talked about that earlier in the week that we did expect probably the Atlanta Fed GDP to come down slightly because we've been noticing that there has been a trend where ever since it pulled up to that 5.4%, it's been just steadily declining. Pending home sales in the negative. We had the initial and continuing jobless claims, and they both came in a little less than anticipated, but again, it's still elevated. The continuing claims are still kind of under where, we're really anticipating them to be right now. The 30-year TIPS auction came in at a lower yield, so overall that's good for the treasury market. Not a whole lot of important data though on Thursday. Now for Friday, we have really the big data sets for the week, and they're all very early in the morning. So at 8:30 a.m., that's when we have the core PCE, the PCE data, the GDP data, personal spending, and at 9:30 we have the, let's see, it says 9:30, but it's actually at 9:45. 9:45 we have the uh, S&P PMI data, so the manufacturing data, composite data, services, and we also have Fed's Bostic speaking. Now, I'm not really too concerned about anything, Bostic has to say too much. We have the Atlanta Fed GDP coming in again, but that's already came in fairly low. That comes in at 10 a.m. And we also have the Michigan inflation data coming in at 10 a.m. And we have the very crucial consumer expectations and consumer sentiment coming in tomorrow. Now, the consumer sentiment and consumer expectations have really been pretty much tanking through the floor throughout most of the sentiments in the ADP, the BLS, just the different reporting or the different data reporting um, services. We've been noticing the trend for a long time now, but it's been gradually increasing to, or, increasing in its weakness anyway. I know that's a weird way to state that. Um, the core PCE data, the expectation is for it to come in slightly hotter tomorrow. I don't really expect that. I kind of expect the data to come in a lot cooler. By a lot cooler, not really a whole lot. I expect like basically a point less than what it is currently. Um, GDP, it's hard to say what the GDP expectation is going to be. We see the Fed GDP now pulling down very aggressively, but we do know that labor, or not labors, but the imports have been basically uh, padding the GDP data very drastically because we haven't been importing a lot of stuff. Um, so that basically is added as a positive to the GDP, which makes it look like our GDP is a lot higher than what it really is. So I don't like how that GDP is reported, but unfortunately that's how it is. With that said, we have been seeing the imports still gradually increasing, or I say increasing, but in the grand scheme of things, it's decreasing the usage of those import funds. So, those import funds grow and they get tacked onto the GDP. So, a little hard to determine where the GDP quarter over quarter is going to be and everything. We just kind of have to wait and see for tomorrow. PCE price index, we know that originally a lot of the data sets were stating that the prices were increasing. Um, the selling season wasn't as bad as, later data sets are showing that it was. So, will we see the PCE increase massively? I'm not so sure. I truly do think we will be seeing the PCE cooling off slightly, but I do know that the personal consumption has been still very, very extreme. So yeah, that's mainly the data sets for tomorrow. We will be going over it all in the morning as it comes out during the stream, so hopefully you all can attend that. And additional note is that tomorrow is going to be OPEX, or today, whenever you're listening to this. But this Friday session on, February 20th is OPEX. It's not going to be a major OPEX, but this generally does mean that they're going to try to stick to a very, very fixed range on the day. With that said, I personally don't like trading OPEX days very much. They're usually very slow. However, we do have very, very, very large data sets coming out today, and that can make today's OPEX extremely interesting. So, we'll see how the day, what the data gives us and what the early market trading gives us. But overall, I generally don't like trading OPEX days, but today is a slight exception to that. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the technical analysis, as always, pulling up the daily time frame and our moving averages and Bollinger Bands. Now, today we had a bit of an interesting day, and we talked about this not in last night's video, because I was not able to put a video out last night, but I know we talked about it in this morning's stream. I don't know if we talked about it in the previous video I talked about, but with moving average tests, we generally will see the lower bounds of the moving average tested and the upper bounds of the moving average tested. That generally means that which wherever the moving average actually is, we can very generally anticipate at least $1 or two, $1 above or below the range of the actual moving average itself. I say $1, I give it basically $2 range. So when the 5 mile is at, you know, 683.80, then we should be expecting the 685.80, and we should be expecting the low end, which would be the 681.80. Now, the reason why I'm bringing that up is because going over today's trading session, the 5 mile was at the 683. It was at the 684 for a period of time, but it pulled down and now it is currently at the 683.30. Um, with that said, we do see how on the actual trading session, we had the upper bounds of the 5 mile. So we basically pulled all the way up towards that 686.27. So tagging that upper bounds of the 5 mile range, pull down all the way to the 681.55, which when we're pulling down, the 5 mile would be pulling down slightly with us. So tag the bottom bounds of the 5 mile range. From that range, pulled back up, and basically we closed almost exactly at the 5 mile. Now in the after hours, we are seeing a little bit of buying, but I'm not really putting a whole lot of weight into that yet because overall we do have some bearish structure going here. With that said, with the 5 mile being tested, okay, now that the 5 mile has actually been tested, this gives us basically two ranges to trade between. Either we're going to start pulling up towards that 20 mile, which would be the 689, or we're going to start pulling down towards the lower Bollinger. Now we did have a lower Bollinger rejection, um, at 2 trading sessions ago, and we got down to the 675.78. And currently the lower Bollinger is at the 678.50. So if we have a rejection of the 5 mod tomorrow, we could be pulling into that lower Bollinger range very, very quickly. Okay. Inversely, if we see buying to the upside, we could be seeing, that 20 ma range taken very, very quickly. Thing about consolidation is that all the ranges squeeze together, which makes some of these moves very, very difficult to determine where the actual trend is because things can be bullish and then all of a sudden a single candle downward. Now all of a sudden things are turning bearish, pulling back upward. It's bullish again, bearish, bullish, bearish. So hard to determine the trend, but we do know one crucial thing, and I'm going to turn off the Bollingers here and the moving averages, is that we've been in an extremely, extremely strong consolidation range. With today's trading session, we have tagged basically the very bottom of this yellow range, and as of the close, we pulled back up and pulled back down into that yellow range. Now, generally when we get into this yellow range, we do see buying out of it. However, there's a lot of bearish conditions throughout the overall market, which I will talk about in just a few minutes. But as you can see, this chop structure is holding intact extremely strongly. Now, what I'm looking at is that we're starting to really build into this yellow range. We haven't seen that prior, even dragging this back further. We have not seen much support building into that range. Generally pushing that range very quickly and pull out. Pushing that range very quickly, and then we're out again. Pushing that range very quickly, and then we're out. Okay, now we're pushing into this range. It looked like we were wanting to, jump out of that range very quickly. All of a sudden, we're back in it again. So unless we start having that aggressive push upward, then this is starting to actually look like it wants to push downward and build towards that bottom of the consolidation channel. Again, with how consolidation channels trade, we generally trade from the bottom to the top, to the top, to the bottom. Now we're seeing basically we got up close to the top, and I know this isn't aligning perfectly, but I'm doing this so that we can kind of see the actual price action instead of just covering the candles. But basically, we pulled up and now we're down again. We've tested the upper bounds of the 5 ma, lower bounds of the 5 ma, and now we're neutral. Well, that makes a lot of sense because we have an extremely, extremely important data set coming out tomorrow, which again, that's the GDP, the PCE data. So the market's really set in a very, very neutral stance. Okay, we're basically between the center of these consolidation ranges. I'm going to turn on the Bolligers for a second again, but we are slightly below the 20 mile range. Okay, but we're still somewhat close to the middle of the lower Bollinger and the upper Bollinger. So major, major decisive point. Again, I am seeing a lot of downside though. We are starting to see some major bearish signals here. Excuse me for that. I started having a coughing fit. Anyway, I am starting to see some major downside, and besides just what we're seeing within these channels, how we're starting to pull down towards this lower consolidation range, how we're starting to build a lot of support within these really, really dangerous liquidity ranges. We're steadily seeing the ADL starting to falter. Yes, it does look like it's pulling up on the day. However, it's really starting to taper out. Okay. Another major signal that we're looking for, and I'm going to hide the drawings, but we are starting to see the 10 mile and the 5 mile pulling below the 50 mile. Now, the last time we had this occur was when we had that major selling back in November. And again, we saw the SPY go all the way from 683, probably was closer to 685 with the dividends, down to 684, or excuse me, 648 86. So $40 move right there. Um, the previous range we saw that occur on is all the way back when we started this aggressive selling in February, which oddly enough, it actually started February 20th. Um, Interesting. But the actual 10 mile and 5 mile did not cross that 50 mile range until closer to March, the beginning of March. So even though we're not seeing that exact type of selling at the top here yet, and we're not seeing this type of selling just yet, what we are seeing is that because we've been within this consolidation range for such a long time, we're seeing the 50 mile finally starting to consume this range. So if we continue to trade within this range and do not have a bullish break above, then we are going to see the 50 MA again consume this range. We will see the 50 MA consume the 20 MA range, and then we will be within a bearish trend, okay? Because that will be saying that we are trading with all of our general moving averages below the 50-day moving average, which that's very, very bearish, okay? Generally, when we see that happen, we do see bear trends occur. Now, we haven't seen the actual 20 mile pull below the 50 mile, again, since that early March selling. So we're not there yet, but that would be the next stage, would be to continue this push downward, see the 20 mile cross underneath the 50 mile, and that would really, really signal that a major bear trend is coming. So things are starting to look extremely dicey up here. Now, another thing that I want to point out very quick because I do want to make this video fairly short is that we're going to look at the yen. If I can find it. Sorry. Apologize for being blind. So we're going to look at this on the weekly time frame. I want to turn off the Bollinger's and the moving averages. Now, what these are showing are the unwinding events. Okay. Um, Within the yen, when the yen pulls down and weakens to such a point, we see the Bank of Japan intervene. And what that means is that they sell securities throughout the market. That can be equities, that can be different ETFs, that could be bonds, treasuries, all sorts of different securities. But what they do is they sell those securities to buy the dollar. And when they do that, they use the dollar to buy the yen. And when they buy the yen's price will increase, which strengthens their sovereign currency. Okay, that's very, very important for central banks to do. Now, this unwinding, this one occurred back in 2024. This was the late July, early August to I want to say the end of October, mid-October, something like that. This one was when we saw the selling from February of 2025 all the way to April of 2025. And now we're back at this point where the yen is extremely, extremely weak again. We've been seeing just a little bit of this buying to the upside, which would suggest that the Bank of Japan is starting to intervene. However, we haven't seen major buying yet, which this is why I'm starting to become very, very concerned of, potentially a major bear trend occurring. Because all of this buying to the upside is saying that this is selling within the market. This is selling within the market. Potentially, this is selling within the market that has not occurred yet. Now, I believe I have this on the SPY as well. Uh, these circled ranges right here. So that's that unwinding event, that unwinding event, and now we're up here with potentially another unwinding event. So we need to be very cautious, okay? Again, this is the weekly time frame, so um, you know, that way you could see this a little better. But this unwinding is very, very serious for the market. Um, it holds extreme, extreme, extreme weight, and it has the potential to, again, drop the SPY anywhere from $40 to over $100. Okay. Am I expecting this all within a single day? Absolutely not. That's not how these unwinding events work. Okay. Generally it's over about a 2 to 3 month period. With that said though, we do see, sorry if you can hear my daughter crying. She's not feeling the best right now. Um, we still see the HIG holding out strong. And just to again make this comparison with the last few major sell-offs, and let me make sure I'm getting the dates correctly. So this is that, okay, so that was COVID. That was the banking crisis. This was the unwinding event of 2024, right? Basically right in here. It's not showing it super well within the weekly time frame. We can see it a little better within the daily time frame. Within that February to April selling in January, we again see the HIG having some major selling, and now we're not seeing selling at all. Okay. Um, this can turn into a very, very quick sell downward, and I don't really know what more to say about that other than I think this is getting ready to drop pretty hard very quickly here. Um, just purely because we do see this correlated literally exactly within the yen and the USD JPY, the DXY, treasuries. Everything is really pointing right now that there's going to be a major unwinding event occurring very soon here. We have the VVIX still trading extremely, extremely elevated. Even with today's quote unquote buying to the upside, this was still holding, extremely green the entire session. We saw the actual VIX close above the $20 range, which that is a somewhat bearish indicator overall. So a lot of these instruments are really starting to tell us that things are starting to taper out within the buying and that potentially the Bank of Japan is going to have to really, really, really start to unwind positions here soon, to, basically save their currency. And not that I'm trying to get extremely bearish here or anything yet, but I'm just starting to see a ton of signals that are telling us that, you know, we really need to be prepared for it. Within the QQQ, we've been seeing extreme weakness as well. We actually do have the 20 mile trading below the 50 mile on QQQ, which again, we haven't really seen that since probably it'll be that February, April. Yeah, that February, April, there was a very, very brief period in here, but that did not last long at all. That was only a few days, not even barely. Um, so again, this is very, very indicative that we are going to be seeing some extreme selling occurring here. Now, here's the thing that is really throwing me off, in terms of the overall market. Semiconductors have been holding extremely strong. If you were to just look at this chart without, the rest of the story, this would be extremely, extremely bullish. You have a cup and handle waiting to break out. You have all the moving averages above the 50 MA. You already had your 20 MA test, earlier this month. So it's ready to break out and push. So as much as the market is bearish, we do have a major bullish signal here. Excuse me. With that, we also have liquid continuing to buy upward. Excuse me, I'm losing my voice. Which again, this is showing that there is some stability within the the upper echelons of corporate credit overall. We see LMT seeing massive buying. Now, granted, this can be because of the whole Iranian, potential conflict that's going to start. Um, but this is also a defensive as well, meaning that this is generally something you toss money into if you just need to have your cash work for you while, de-risking from riskier assets like tech, some of the mags, things like that. So a lot of signals are telling us that, again, potentially there's going to be some real selling going on. We also have TLT starting to see a very large amount of buying. Um, Talked about this earlier in the stream. I'm not going to talk about it in this video, but this is starting to open up positions to buy the upside. I do want to see a push downward before we really take long positions here. But this can trade from basically the upper Bollinger to the 5 mile, upper Bollinger to the 5 mile, upper Bollinger to the 5 mile. So overall, um, tomorrow is going to be an interesting day. We just have to be very on top of what the data gives us in the morning. And not only that, but what all of our instruments tell us after the open. So we will take a look at the VVIX, see if we see that aggressively pulling down or aggressively pulling upwards. We'll start looking at the FX market to see if, the dollar starts weakening, if the yen starts strengthening, and look for those signals to see if, that unwinding is going to be starting, or if, potentially we're going to see this weakness spot up and start pushing towards that all-time highs. But again, I am currently not bullish overall. I am just starting to see this trend tapering out. However, the last few times we have went underneath that range that I talked about, we have seen a large buying to the upside. And, potentially this can be that large buying to the upside phase. So it's a little too soon to say whether this is going to be a major bear trend or if this is just a small bump in the road. But I do know that this consolidation is extremely aggressive. It's been holding for almost a full quarter now. So that's probably one of the strongest consolidation ranges I've traded personally. Um, so yeah, I'm interested in what the data will give us tomorrow because I do believe the data will be extremely crucial in determining where the trend goes over the next few months. So, okay, everybody, going to end the video here. I hope you have a great trading day tomorrow and that you have a great weekend overall. Thank you for watching as always. I hope you have a chance to like the video, subscribe, and hopefully you could share it with someone who enjoys listening to, stock analysis and commentary and everything. And hopefully you all can join the morning streams. We've been having a lot of success with the early morning scalps. Some of the trades have not gone the best. For example, the trades today we entered in the market still pushed upward slightly more. We did actually get out of those with major profit, but it was a little shaky at the beginning. But overall, the signals did tell me that today was not a major buying day. We still had all those major signals of potential weakness, and as long as those are present, then um, you know, we're going to be more cautious with our scalps and everything. Anyway, I'll stop rambling. Take care, have a good night, have a good weekend, and I will either talk to you in the morning tomorrow or I will talk to you in my video on Sunday. So take care, everybody.